What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex, and we're going to be going over a really high win rate options trade. So on our screen right here, we have already set it up. It's a put credit spread, and what we're going to be doing is we're going to be doing it on Rocket Companies, ticker symbol RKT, which has been beaten down a little bit by earnings. It was at highs of 19.5, and then it's been selling off ever since. But there is some nice support around the $17 price point, and we're going to be taking advantage of this low volatility period by selling a put credit spread and receiving some really nice premium return on our capital for selling this spread. So we take a look at the technical analysis. If we want to be pretty conservative, there's a really strong support at the $17 price point. And that's exactly how we're going to be capitalizing on this options trade. We're going to be selling a put credit spread with the strikes. You could do $17 strike, but we're going to be a little bit safer. We're going to be selling the 16.5 strike put and then buying the one under it, which is going to be the $15 strike. Unfortunately, they don't have a $16 strike. Kind of odd how they just kind of skipped over that. But this is the strike we're going to be working with. The 16.5 sell and then the $15 buy. And on our screen right here, it's going to label it as a put credit spread. We're going to receive a minimum credit of $11 and putting down a collateral of $150. So very, very high win rate on this trade, and it expires August 27th, so it's going to give us a week and a half of time. So let's take a look at what the profit is going to be. Our collateral is $150 minus our minimum credit, going to be $131, and then so we're going to divide our minimum credit by our collateral, which is going to be $139 actually. As we can see, it's going to be almost an 8% return on your capital in just a week and a half. So very, very high win rate for an 8% return. So this is going to be a really nice trade that we're going to be looking to open when the market opens this week. So this is going to be a good trade that I would do. If you want to be a little bit risky, you could do the $17 strike and then selling the 16.5 strike, and you will receive quite a bit more premium. So let's actually take a look at what that's going to give us as far as a return. Selling the $17 strike, because remember, there's a really strong support at $17. So that's why we're going to be choosing the strike price. And then we're going to be buying the one under it, which is going to be the 16.5. Total credit is going to be $8, and we're going to be putting down a collateral of $50. Really, really good return on your capital. Let's calculate what that is. It's going to be $8 of credit divided by our collateral, which is going to be this collateral minus our minimum credit, $42, and that's going to be at 19% return in a week and a half. Really, really high win rate for this trade. As we can see here, it's going to be about a 77% win rate. Very, very, very high probability, especially since we're selling a strike price that is at the support level, a major support level for the stock. So very, very good trade that we're going to be looking to open next week. And this is one of the best ways that we're going to be growing our account. It's not to buy options. Buying just straight up calls and puts are pretty risky, but selling options and capitalizing on receiving credits and receiving the premiums for opening these strategies are kind of the way to go, because they have a very high chance of winning, and they're not as risky. The downside is if the stock happens to skyrocket, your max profit is always going to be the minimum credit, but the way to win in the market is consistent wins. Yeah, so that's how we're going to be looking at this stock Rocket Companies for the market open. Very, very high win rate, especially since they have reported their earnings already. There's not going to be much short-term catalyst that can move the stock that much. Because remember, as long as Rocket Company stays above $17, we're going to win on our trade and keep our credit. Now, of course, you might be thinking, $8 of credit. That's not that much. How can we make even more? Well, just sell multiple contracts. If you have a bigger account, obviously these strategies, put credit spread isn't going to break the bank. Doesn't require that much collateral, as we saw here. This one only requires $42 of collateral per contract. You can sell multiple contracts. So let's say 20, you'll receive $80 of credit. Only need around $420 of collateral to put down. If you want even more contracts, just go ahead and throw them in. 100 contracts, $800 of credit. This is going to be people with medium-sized accounts. Obviously, you don't want to throw in all your money. You do have to make sure you're doing proper risk management in case the trade goes sideways. But if you have larger accounts and you'd rather sell cash secured puts, you could just straight up sell the $17 strike price, and that's something that I would be considering doing as well, because I do like the stock. I do like rocket companies. Very, very good, solid company, and I do expect them to grow in the future. So that's about it for this video. If it helped in any way, please leave a like, comment down below if you want more strategies like this. I need some feedback. Of course, subscribe if you're new to the channel. It helps out a lot. Thanks for watching.